For today's discussion, our topic will be about dividends and treasury shares. However, we will not going to discuss um, all dividends, no? Kasi we will focus on the basic dividends lang. Okay? Yung ibang type of dividends will be tackled naman yon on your auditing problems. Okay? At least hindi maging overlapping yung mga topics. Okay? So, for today, our topic will be about dividends. Okay, let's begin with dividends and then later on we will proceed to treasury shares. Okay, dividends refers to shareholders' share of a corporation accumulated profits. In short, kung sa partnership, this is the share from the profits of the partnership. Pero in a corporation, it is in a form of dividends. And the dividends will be based on the number of outstanding shares you have and plus subscribed shares if you have, provided that the subscribed shares are not delinquent. Okay? Kaya nga, the stockholders that are entitled to receive dividends are all outstanding and subscribed shareholders. Okay? For the subscribed shareholders, provided that those subscribed shareholders are not delinquent. Okay? In dividends, okay, because dividends will affect retained earnings because this is charged against retained earnings naman, there are three accounting dates that we need to remember. Number one, the date of declaration. The second one is the date of record. And the third one is the date of payment. Take note, the date of declaration is the date wherein you are going to prepare a journal entry related to the number of shares declared, to the amount of dividends declared rather, okay, and that amount declared as dividends will be charged at the same time to the retained earnings account. That's why our pro forma entry on that particular date will be a debit to retained earnings and a credit to dividends payable. For crediting no of dividends payable account, you may specify it. For example, if the dividends payable is related to cash dividends, you can say cash dividends payable. If the dividends payable is related to shares, that is share dividends payable. Okay? For date of record, you don't need to prepare any journal entry because the date of record, you just record number of the number of shares, okay? Shares or dividends, I mean, okay, to corresponding shareholders, okay? So that is the purpose of dividend um, dividend date of record. And then the third date that we need to recall is, to remember is the date of payment. The date of payment is wherein we prepare entries, wherein there is already an actual outflow of resources, wherein that is a the recognition of the payable account, and then crediting also of a cash or a non-cash asset as consideration for payment of dividends. Okay? And then, okay, no? Yun yung mga importanteng mga dates na dapat natin i-recall. Okay? Next, okay? We have different types of dividends. But in this case, we are going to discuss only the two types of dividends because the other dividends are not too common, no? But these two types of dividends that I'm going to discuss are the common dividends that you will encounter in answering problems in the canvas. Okay, we have the cash dividends and the share dividends. Cash dividends, once we declare cash dividends, okay, at the date of declaration, there is a decrease on retained earnings, at the same time, a recognition of a liability in the form of a cash dividends payable. Okay, cash dividends can be declared into two ways. Una, based on percentage of the total par value, or stated value or the par value or the stated value. No? Ibig sabihin po nun, pwedeng percentage of the total peso value, okay, at par or the total peso value of the stated value. Or pwedeng porsyento ng par value per share or porsyento lang ng stated value per share. For example, no, 30% of the total peso value of the outstanding shares and subscribed shares. So, ibig sabihin, if there is 1 million no, outstanding shares, inclusive of the subscribed shares that are not delinquent, 30% of the 1 million are considered dividends. So, the amount of cash dividends being declared is around 300,000 pesos. Pwede naman, pwede sabihin 20% of the par value. For example, if the par value is 1 peso per share, 20% of which, that is 20 cents, okay? 20 cents per outstanding and subscribed shares. Then later on, to the totality of the dividends declared, if that would be the case, naka-porsyento per par or per stated value, multiply it to the total outstanding shares and subscribed shares. By the way, if we talk about outstanding shares here, guys, make sure that the treasury shares are deducted from that shares issued. Kasi the issued shares, pag issued shares ang pinag-uusapan, this includes shares issued and shares reacquired. Para lumabas ang outstanding shares, we need to deduct the treasury shares or the shares reacquired. Okay? That is outstanding shares. Pwede naman based on peso amount. For example, ito, diretsahay, that 250,000 cash dividends were declared. Yun na yun. That is the value of the cash dividends declared. And will be paid later on, no? And then we have the second type of dividends, the share dividends, okay? So, ito, importante to guys, ha, yung share dividends. We have two classes of valuation of share dividends. If the dividends are declared less than 20% of the outstanding shares, for example, the outstanding shares is 100,000 shares, no? And then the company declared for 15% of the outstanding shares. So it means that is 15,000 only shares that can be declared as dividends. Okay? So if it is below 20%, the value of the dividends must be at fair value. Take note, at fair value. Kasi small, fair value. If it is a large dividends, okay, pag sinasabing large dividends, that is 20% and above. For example, 25% of the outstanding shares were issued as dividends. So from the 100,000 outstanding shares multiplied by 25%, that is 25,000 shares, you need to value or to measure that dividends at par value. Par value. Sir, ano po yung fair value na sinasabi on the valuation of less than 20%? Fair value on the date of declaration. Take note that the fair value must be on the date of declaration, not on the date of payment. The date of declaration. Whatever fair value of the shares on the date of declaration, if it is a small dividends, the fair value on the date of declaration is the valuation of that share dividends. Sir, ano po effect if we declare share dividends? If there is a declaration of share dividends, there is no liability, guys. There is no liability. Share dividends payable are not considered liability. Why? Because this is just no. Take note, if we debit retained earnings and we credit share dividends payable. Okay. Even though it's a payable, it's not a liability at all. Why? Because that payable na share dividends payable, wala pong outflow of resources yan. Take note, yung ipambabayad ng kumpanya on that particular shareholders are shares of the company itself. So, ibig sabihin, Pag ipambayad nyo yung shares na yon, and then bayaran na yung share dividends na yon, babalik pa rin yon on the company. Kasi magiging share capital yung share dividends payable na yon later on. Kasi pag sinaming um, debit retained earnings for 250,000, then credit share dividends payable. Okay, that's the date of declaration. On the date of payment, paano po? Debit, share dividends payable, then you credit the share capital at par, any excess will be recorded as a share premium. In short, para lang po kayong nag-issue ng shares but in a form of dividends. In other words, wala pong outflow of resources. Instead, there is only a reclassification of retained earnings into shares. So that's why share dividends payable is not considered as a liability because it will not meet the definition of a liability. Okay? Example, no? Declared and paid dividends, outstanding ordinary shares 300, par value at 10, fair value at 12. The declared dividends are cash dividends 5 pesos per share and share dividends 25 of outstanding shares. So what would be our entry for this? Obviously, I will prepare an entry that is a compound entry for both dividends. So we debit on the date of declaration, okay, declaration, no, declaration. On the date of declaration, okay, we have debit retained earnings for around how much? Obviously, that is 5. 5 muna. Multiply the outstanding share of 300,000. Okay? And then, bakit? Kasi dapat it's a composition of two dividends. Yung 5 multiplied by 300,000 is pertaining to the cash dividends. And then, we need to multiply, okay, 25% of the outstanding shares, which is 300,000. Okay? Multiply that because this is a large share dividends, it must be valued at par. Okay? So, multiply at 10. So, the answer, the retained earnings na madideduct natin would be 225. And then, okay, next, our credit would be cash dividends payable amounting to 5 multiplied by 300,000. And then credit share dividends payable which is at par value, that is 10 multiplied by 300,000 times 25% of the 300,000, so that is 75. That would be our entry on the date of declaration. How about on the date of payment? No, on the date of payment, our entry would be debit. Okay, debit share dividends payable. Okay, payable, which is 75, and then credit cash dividends payable at 150. Okay, and then credit for the cash, that would be credit cash kasi babayaran mo yan. Okay, and then for the share dividends, that would be share capital. Okay, kasi mag-i-issue ka ng shares at 750. At 750. Okay? Magiging 750 po yan because, no, no, because we value it at par. Sir, what if it is um, valued at fair value and then there is an excess of par? Well, you need to record share premium, no? Share premium on the issuance of shares. Okay? Maganda naman sa example ko kasi we issue the shares at large dividends and it was valued at par. That's why wala po tayong share premium on the issuance of the shares on the date of payment of the share dividends payable. If it happened that the share dividends payable were measured at fair value, so that would be the excess of par, no? Kasi itong share capital must be valued at par. If there is an excess, that we need to have an additional credit which is share premium issuance. Okay? Take note, no? Okay. So, yun po yung dapat natin ma-recall on dividends, particularly on cash dividends and on cash dividends. Our last topic naman for today will be about treasury shares. Okay, let's talk about naman treasury shares. Take note, generally, the generally accepted accounting principle provides that treasury shares must be recorded at cost. Ibig sabihin, we are going to use the cost method, no? Okay, cost method po ang pinapagamit on recording or accounting of treasury shares. Paano po i-apply ang cost method on the treasury shares? Well, take note, treasury shares are reacquired shares. Parang yung inisyu mo na sa shareholder, binawi mo pa. So, that is a treasury shares. Okay? No? So, that is reacquired shares. For example, ABC reacquired 25 shares. No? 25,000 shares with a par value of 15 for 300,000. If that would be the case, no? Okay, our entry would be debit treasury shares. Okay, we debit treasury shares for around 300,000. Okay, 300,000, and then we credit cash because of the reacquisition of that treasury share. Okay, so ganun lang po yun. Kung magkano po yung cost for the reacquisition, yun po yung value ng treasury shares. That is the cost method. Sir, are there instances ba that the reacquired shares can be reissued? Yes. And this is very important on the reissue ones. Assumption number one, no? If it was sold again for 350, ano po ba entry natin? Well, we use the cost method pa rin, no? We debit cash, okay? Nakatanggap ka ng cash for the reissuance, no? Okay, which is 350. Okay? 350. And then, you credit treasury shares, which was originally measured at cost, no? On when you reacquired it. So that would be 300,000. Kasi that was the original price or the original cost of the treasury share. And then any excess, okay, from the reacquisition, okay, any excess of the issue price, of the reacquisition, of the reissuance price, and the cost of the treasury shares must be recognized as share premium on reissuance, not as gain on reissuance. Instead, that would be share premium on treasury shares amounting to 50,000. Okay, that's it. How about, sir, if it was reissued below cost? Ito, kailangan mo itong ma-memorize, no? With debit cash, kasi nabili lang at 250. Okay, nabili mo lang at 250, you credit treasury shares at its cost pa rin, 300. Sir, paano po ba yung loss na meron dyan on the reacquisition? Well, the loss, ito no, the order of priority if there is loss on the reacquisition, una will be it will be absorbed the share premium, no? It will be absorbed by the share premium. Share premium of what? Of the treasury shares. And then if the share premium treasury share balance is not sufficient, the retained earnings will absorb the other remaining loss. In this case, the problem provided that there is a share premium on treasury shares. Okay? Share premium treasury shares. Okay? So, if that would be the case, the loss is 50,000. Take note. So, yung kaya lang i-absorb